This is Brett. Brett is the sole trader for his business, Brett Surfboards. Upon discovering that his company transaction records didn't match up with his bank statement, he was confused. In search for help, he met with the bombastic CPA, John Tyler. "I know what you need," said John. "I'll prepare a bank and reconciliation statement." John then proceeded to fantasize about bathing in $50 and $100 notes and making the accounting A cohort laugh at his obscene jests. Investopedia defines a bank reconciliation statement as a summary of banking and business activity that reconciles an entity's bank account with its financial records. The statement outlines the deposits, withdrawals, and other activity impacting a bank account. It is also considered a financial internal control and cash control tool used to prevent fraud. When Brett got his bank statement, he had a balance of $5,500. However, his company records had a balance of $6,901. John finds out that there have been three deposits in transit, being $1,350, $760, and $300, and outstanding checks of $400, $260, and $54. None of these have been recorded in the bank statement. These are amounts recorded in the company records yet not have cleared bank. Deposits are thus added and outstanding checks are subtracted to get an actual cash balance of $7,910. As for the company records, John is notified that we have a note receivable of $340 and its interest received of $60. He also knows that there was a $100 check erroneously recorded as $125. $340 and $60 and $25 are all added, and finally there is a monthly service charge of $50 and a bounced NSF check made by a customer of $80. $50 and $80 are thus subtracted. And John then proceeded to make the appropriate journal entries. He debited cash and credited notes receivable to record the collection of note receivable. He also debited $60 of cash and credited $60 of interest receivable to record the collection of the interest receivable. Since the check was overstated by $25 is debited to cash and credited to accounts payable to correct the error. The monthly service charge expense is then debited by $50 and cash is credited by $50. Finally, the bounce check makes accounts receivable debited by $80 and cash credited by $80. Thus, the bank statement and the company records are all reconciled to $7,910.